Hello there. Welcome back to Count Space. This video, we want to look at the preparation of notes to the balance sheet. So we're going to go through the question. The question reads, the following balances and totals appeared in the general ledger of Saint Gaby traders on 30 November 2018 at the end of their financial year. So we have a question that we have there, whereby 5.1 requires us to prepare the trading account and profit and loss account, and 5.2 requires prepare only the asset section of the balance sheet for the year ended 30 November 2018. And lastly, we have put show the loss to the balance sheet. So according to this video, we are only concerned about part 5.3, whereby we are going to show the loss to the balance sheet. So and it has got 90 marks. So we are given a trial balance of Saint Gaby traders on 10 November 2018. That's where the year is ending. And then beneath that, we have a trial balance that you need to go through before you answer the question. You go down the trial balance. We also have additional information that is there. That is trading stock on hand after physical stock taking on 30 November 2018 was valued at $280,000, 280,000 rands. So this is what we have. And then if you go to the other section now, you are given the notes to the balance sheet. So this is the section that we're going to fill all the notes that are necessary according to the question. So we are going to start with the property, equipment, and vehicles note, whereby this is the non-current asset note. And obviously, we are going to try to see which to pinpoint in terms of the cost of property, equipment, and vehicles. And remember, this question does not have depreciation. So basically, we're just going to take the cost price of this equipment that are given in the trial balance and put them there, and then get the total that is going to represent our property, our equipment, and vehicles in the balance sheet. Remember, notes to the balance sheet come as pre-calculations that are made before you prepare the balance sheet. So after preparing the notes, we are going to transfer those balances to the balance sheet. So this is what we have. So basically, the basis is that we do the notes to the balance sheet as pre-calculations of figures that we need to put in the balance sheet. So this is what we have. So let's just try to see which non-current asset or fixed assets do we have in the question. So firstly, we are seeing that we have got our landed buildings as a non-current asset, as a fixed asset, and then we have got equipment as a fixed asset, and we have got vehicles as a fixed asset. These are all the fixed assets that we have, and you see that we do not have any depreciation in the trial balance. So let's just pick landed buildings as 800,000, equipment as 730,000, and vehicles is 705,400. So we're going to pick them as they are and go to the other section. So we're going to start. We are going to start with the first one, which is our land and buildings. So we're going to say land and buildings. And the figure that we have for land and buildings is 800,000. So we're going to put them in this column. And next, we have what equipment. In equipment, we've got 730,000. And we go to the vehicles. And the vehicles, we've got 705,400. So these are all the fixed assets that we have done. We add them all to get the total, which is supposed to come here to represent our property equipment and vehicles, which is going to be 1,931,720. So this is our total. So this is the note that we have for property, plant, and equipment. Then we are going to the next note, which is of stock. Stock. Then we are going to take as stock. So for stock, we go there again to see which stock is mentioned in the question. But remember, the stock that's supposed to come in the notes is the stock that is the closing stock. So you see that below the trial balance, you're told that trading stock on the end after physical stock taking on 30 November 2018, which is the year end, was valued at 280,000. So basically, we are going to take our trading stock. So the stock that we have is trading stock. So in some questions, we are going to see that you might have consumable stores, you might have stationery as part of our closing stock. So it means we are going to include them there, add them, and then you get the total. But in this case, we've got only one type of stock, which is trading stock. So we can just transfer that one as our trading stock. So we come here, and we are saying we have trading stock, and the amount for trading stock is 280,000. And this the same amount that's going to come is our stock here, 280,000, since we only have one item of stock. Right. After stock, we are going to move to trade and other receivables. So that's the note number 3. Trade and other receivables. And for trade and other receivables, we are going to check if you have got debtors control in our question, and obviously other receivables, we might have some prepayments of expenses, we might have accruals of income. They are also part of receivables, but in this question we do not have such, so we are just going to pick our debtors control, which is 750,000. So we can just go and put our 750,000 as our trade and other receivables, which is debtors control. So here we are saying debtors control. So for debtors control, the figure that we have is 750,000. So we are saying 750,000, and it's also going to represent our total for trade and other receivables, because we only have one trade and other receivables, 750,000. And enough on the trade and other receivables. We can move on to the next. We have now cash and cash equivalents. Cash and cash equivalents. We are going again to check if we have got bank cash floats. Those are some of the components of cash and cash equivalents. You see that the bank that we have is a credit balance, and when when the bank balance is a credit balance, it's a bank overdraft. It will be a bank overdraft, and when it's a bank overdraft, we are going to put it under current liabilities, not under the cash and cash equivalents. So cash and cash equivalents, we have got petty cash 6,000, which are on the debit side, and also we have cash float 5,700. So those are the two components of cash and cash equivalents. But if bank was on the debit side, we're also going to include it, but it's on the credit, so it's already out. It's going to be under the current liabilities. So we have petty cash 6,000, cash float 5,700. So let's just go there and put those. So we are here. We are saying a petty cash. Petty cash, we have got 6,000. And then we have cash float. Cash float, we've got 5,700. And then we add the two, we get the total for cash and cash equivalents. You're going to get you 11,700, which is going to come in line with cash and cash equivalents. So you're saying 11,700. So this is what we have. Then our next note that we're going to prepare is for capital. So we are saying note number 5. And for capital, we are going to put the final figure for capital, which is closing capital figure, in line with this with this set line of capital. So we're just going to calculate it beneath that. So remember, to calculate your closing capital, we say opening capital, we add net profits, then we less our drawings. So the opening capital figure, we get it in the trial balance. Go back and see what figure for capital do we have. we have here 1,931,712. So this is our opening capital, and or we can just call it balance at the beginning of the year. So we come here and we are saying balance balance at the beginning, balance at the beginning of the year, and the amount that we have is 1,931,720, and we are supposed to add net profits. If there's a profit and if there's a loss, we're going to subtract net loss. But remember, if you come here, you would see that the figure for net profit or loss was acquired on the first part where there was the preparation of trading account, profit and loss account for the end of 30th November 2018. But obviously, when you check the previous videos on my playlist, on my channel, there was the preparation that we did. There's a video that we did on the preparation of this trading account and profit and loss account. And the figure that we got there is our net profit was 585,380. 585,380. So this is the same figure that should come there to add it to our capital. So to our open capital figure, we can just go there and say plus net profit plus net profit. And then the figure that we are going to get there is 585,380. And then if you add the two, you're going to get a total of 2,517,100. So this is what we have. And then I having got that answer that we got there as the total, we are supposed to subtract now drawings. So we're going to say less drawings. And the figure for drawings, we get it in the trial balance. You can go back and try to see what do we have in terms of our drawings. Our drawings we're having there 10,000 here. So we subtract 10,000. So here we are saying 10,000. And it's a subtraction. So I will calculate the search. We can just close it and close it. And then obviously the answer is going to come here now. When you say 2,570,100 minus 10,000, you're supposed to get 2,507,100. So this is what we have in terms of our capital. Then lastly, we have got trade and other payables, which is our number 6. Here now we are saying trade and other payables. Trade and other payables. And for trade and other payables, obviously, we are going to check again if you've got our creditors control. And if you also have other payables like accruals of expenses in advance of accruals of expenses and in advance of income. They are part of payables. But in this case, we do not have such. So we're just going to pick our creditors control, which is here, is 55,000. So let's just go and put those as our trade and other payables. So we're saying creditors control. This is our creditors control, and the figure that we have for creditors control, we're saying 55,000. See that this is the same figure that is going to come here because we do not have other payables, only we only have one item, which is our creditors control. So we have 55,000, which is going to come here. So this is what we have. So you see that these figures that we got there in the last column is our final figures for each and every note are the figures that we also are going to use in the balance sheet. So when we prepare the balance sheet, we just take these figures and put, if you are, we arrive at other current assets, for example, we are going to put our cash and cash equivalents as a part of the current assets, and then we put this final figure that we got here, 11,700. So basically, what we are saying is notes to the balance sheet comes as pre-calculations that are made before preparing the balance sheet. And when we prepare the balance sheet, we're just taking figures from the notes. And obviously, on that balance sheet, there will be a column to represent where are you getting the figures. So when you say cash and cash equivalents, there's a column for notes that you are going to say note number 4 is where you are getting the final figure of 11,700. So basically, this is what we have in terms of notes to the balance sheets is part of the process of preparing financial statements or final accounts. So this is what we have, guys, in terms of this video. Let's stay tuned for more videos to come. As for this video, I'm out. We meet again.